Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, with news China's relaxed its term deposit interest rate caps. But first in the US, politics is hurting consumer sentiment. The University of Michigan's Consumer Sentiment Index fell in April to a reading of 97.8, down from 101.4 in March. Analysts expected a reading of 101, so this is a notable drop. Getting the blame were fears of a trade war and fears of rising interest rates. A US Fed board member has expressed concern over the growing American fiscal deficits, saying recently passed tax cuts and spending increases are raising risks that authorities won't have a full toolbox to counter the next downturn. A certainty, says Bill Gates. And a drought in key US states is forcing more cattle onto feedlots and into slaughterhouses, putting extreme downward pressure on beef prices. Given the size of the US cattle markets, this can't be a good thing for international prices. In China, they reported a surprising trade deficit of nearly $5 billion in March, a turnaround from a surplus of $33.5 billion in February. This is the first monthly deficit since February 2017. And the crackdown on shadow banking is weighing on credit growth in China. That adds to uncertainties facing their economy, already dealing with trade tensions with the US. And China has also relaxed the ceiling on bank term deposit rates in a new financial sector reform move, but is retaining caps on other types of deposits. Freight rates are set to rise for New Zealand as a result of climate change policies adopted at the end of last week. Slow steaming by ships is one of the outcomes from a new global agreement, and new ship technologies required will also add billions to ship owners' costs. All this will add up to higher freight rates for countries far away from markets. And the US Treasury 10-year yield ended the week down at 2.82%, that's 1 basis point drop. US 2-10 rate curve is now under 50 basis points, and that's the lowest since before the GFC. The Chinese 10-year is at 3.74%, that's unchanged, while the New Zealand equivalent is 2.84, that's up 3 basis points. Neither the US or China have 2-10 rate curves moving lower like the Americans do. And gold is at $1,345 an ounce in New York. That's up $9 on Friday. Oil prices have inched ahead and are still just over $67 a barrel, while the Brent benchmark is just over $72.50 a barrel. JP Morgan reckons it could hit $80 a barrel during the Syrian crisis. The Kiwi dollar ended the week up at 73.6 US cents. On the cross rates, we're at 94.8 Aussie cents and 59.6 euro cents. That puts the TWI at 74.7, still near the top of its 2018 range. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.